Energy Financial Modelers, let's move on to question 4. And this is where we are ready to restate the income statement and balance sheet. So first I will open the model template, and then I will pull up the originals and copy and paste into column J. Select the entire columns, copy, paste. Now before I can start on the income statement, I need to do our revenue build again. I guess I can start with one line on the income statement, so I'll take these numbers, and I think the instructions say to use formulas, equal, Control R, and we'll go through the revenue build section again. This time with a different company. I think in the other video I used Continental. Since we're doing Apache, I'll do a quick review of that. Going to use the hyperlink to get down to the MD&A section, and I need to look for daily production. And you probably recognize this chart from the previous video. The numbers we're looking for, nope, this is revenues. Let's keep going. Now we see barrels per day in our oil volumes. And so remember, in the 10K it generally goes newest to oldest. In our model it goes oldest to newest. So I'm going to start with the 2017 oil volumes, copy, paste, copy, paste, and I will be quiet and speed up the video. Remember to divide by 6 when you're adding the gas in. And copy those formulas to there. This is going to be daily times 365 divided by 1,000. Copy, paste that formula. And I promised to give you the marker prices, so let me hit pause and go find them. And then we can calculate the revenue that we would have received if we were able to get hub pricing. So our annual oil volume times the dollars per barrel plus annual gas volume times dollar per MMBTU plus the NGL volume times the oil price. And it looks like we have an issue with significant figures here, so I'm going to put all that in parentheses and divide it by 1,000. If I didn't do that, then when I calculated this as a percentage of this, it would not have been close to 100%. It would have been far less than 1%. So we want it like that. So I'm going to copy this row across, copy that row, and now we are ready to go through our forecasting methods. So as I look at the 3 different types here, I see that we have this one. Sale on assets is probably a gain on divestitures. Sorry, gain on sale of assets is a gain on divestitures. And then our good friend other income, we can work with that. We don't have hedges showing up here, so we're just going to leave that blank. Control R. Lease operating expense, that's an easy one. GP&T, that's an easy one. Taxes other than income. See, I told you you'd like this model better, this template. Now, exploration's a little bit out of order because they didn't calculate EBITDAX, but we did. So I guess I could go pick it up now. Depends on whether I want to work down this list or want to work down this list. But I don't think I need to read you these titles, so I'm going to turn the sound off and speed this up. restructuring was a little bit tricky, but if you think about it, transaction, reorganization, okay, it's not even that tricky if they have the word reorganization. Okay, I see I've left a blank line in the template. I'm going to take that out to make it less confusing. And then I've got a couple of these other type things that I'm not sure if those were represented over here. So my favorite way to check all that stuff is to come here and do an Alt-M-P to see what precedes that, and then Enter, and then repeat. And what I see is I've used everything from LOE down through financing costs, and then I get a total operating expenses. So I wonder if financing costs may be what we mean by interest expense down here. And it appears that it probably is. So I'm going to go ahead and put it in. And then I'm going to see if all of these costs sum 5505, 5505. Okay, I think I can carry them forward. And I didn't use this other line, and I didn't use this other line, just like I didn't use the hedges line. And I don't know that I've given you a template before where you ended up with some blanks, but I think after you practice this with several companies, you'll agree that this template is a pretty good laydown for what you need to expect out of the other energy companies. Now, before I come back to interest, I want to go ahead and work through these different types of net income. So net income before taxes, let me put in my formulas here and see how close I get to the answer. I was able to match the net income before income taxes with my math here. Now notice that in this particular one, they had theirs positive. I didn't fix that. I could go ahead and fix that, but for the sake of time getting this video out, I'm not going to do that. Income tax provision. Income tax provision is, notice they have a current income tax and a deferred income tax. So I'm going to add those two together. And since together they make the net income go up from 918 to 1503, then I'm going to subtract that number from 918 since it's negative to get the 1503. Now I'm calling that continuing operations on the 918 and 1503 line. They said it's including non-controlling interest. Well, they didn't have any discontinued operations, so we can just carry that row, carry that number down. And let's see if they had any non-controlling interest. They did. And so the net income attributable to non-controlling interest, 199. When we subtract that off, we're left with 1304. That's attributable to common stock because they didn't have any preferred stock. And so we'll just carry it on down. And then we match our net incomes all the way across. This is a little bit new to you, but I thought it would be better to include it, all the possibilities, so that you could see how we're getting down to the bottom line net income, and then net income here. And then the one that I give you on the exam, if there are things that are missing, I'll probably just leave those off of the template. If for some reason I don't, then you can feel free to just leave them blank. Okay, now we are ready to, well, let's go ahead and do our dividends, I guess. So we know to get dividends from the bottom of the cash flow statement. And I'm afraid in this video I have completely messed up our sign convention. I think I'm using outflows as positive in pretty much all cases. And then do we have share counts? We do have a weighted average number of common shares outstanding, so I can take that and I can actually copy that because basic and diluted are in the correct order. And we've completed the historical income statement. That was the restating. That's I've told you several times, don't sweat that part. I'll be as forgiving as possible, but you have to have some numbers that are plausible to work with. So if you want to calculate your oil production year-on-year growth, copy that for gas, but for NGL, I'd recommend using that as a percentage of the gas stream, since natural gas liquids come out of the gas stream. If it represents 6 barrels per 0.06, if it represents about 6%, even though the units are a little messed up, you can use that to forecast your NGLs. And then many of these others I've just put down here as dollars per BOE. So lease operating expense divided by the annual number of barrels that we've produced, energy equivalent barrels, will give us our LOE dollars per BOE. We're going to do a lot of things per BOE, so we'll be dividing by D18 a lot. I'm just going to start typing that. So for example, our GP&T would be the cost divided by D18. Our taxes other than income would be the cost divided by D18. Now, do you see a problem here? As I'm doing this, I'm seeing some very small numbers. I think with Apache, I think I chose a bad example for this video, and I don't have time to go back and redo it. But our volumes up here seem to be off by 1,000. That was an issue when I got here. Where was it an issue? When I got here, I had to divide by 1,000. And I'm going to have to multiply these guys by 1,000. This will not be an issue for you in the exam, because I don't expect you to know that lease operating costs is typically single digits of dollars per barrel, but it's something you just learned. Usually costs somewhere between $5 and $10 per barrel to operate a lease, and so I'm going to have to multiply each of these by 1,000. I will make sure that the company that I give you in the exam, that's not an issue. So times 1,000, times 1,000, times 1,000. And now we see some reasonable numbers that we can carry forward and then come over here and use to forecast with. I'll continue expenses other than business. Don't believe we even had any of those, so I can leave that blank. G&A divided by D18 times 1,000. I'm going to use that so many times I'm going to start copying that. Impairments. Now impairments I wrote on here, forecast is 0. An impairment is when prices go down or something negative happens and we wouldn't expect that to continue into the future. So it's a non-recurring event. So we'll just forecast those as 0. And now I'm back to asset retirement obligation. Divided by D18 times 1,000. Forecast that one as 0. Other operating expense, I don't know if we actually had any of those. We didn't. They were blank on this particular company. And then interest expense is an average of, as a percent of average debt. That's something that we've done in our previous examples. Now I need to go into the 10K and see if I can find interest income. Interest income, and there are 3 returns on that. The first one shows up in this table that gives us interest expenses of different types, and then interest income. And they net out to 462, 478, 397. And those are these 3 numbers that we got from over here. So if I take those and copy paste them as values, then I should be able to come here and take the 19, 22, and 13. And then recalculate these to be that minus that. And so our net interest expense was a little bit higher. Or I'm sorry, our interest expense was higher than the net because it's offset by this income. And now we have the net interest expense. Now that I have an interest expense, I can take I want to take the interest expense divided by the average of my debt. And that won't work until I have any debt, but then it should work fine. And then I want to take the interest income divided by the average of my cash. The effective tax rate, which we've done many times. Income tax provision divided by the pre-tax income. Seems very high. It must have been a unusual event. If I take it to the next year, it looks much better that year. Negative 23 is about what we expected. And then finally, the dividend payout ratio. Dividends as a percentage of what was available to stockholders. That is not sustainable. That's a lot more reasonable. I think there was some very strange non-recurring things going on in that year. And in fact, since a couple of these refer to averages on the balance sheet where we don't even have those items, I believe, like the other standard template, I only asked you to do 1 year worth of ratios. So let me copy those forward. I'm going to get rid of these. And then these are the ones that we looked to fill out during the exam. So when you go to do your forecasting, you can say equals those with a control enter. And then you'll have the numbers that you need, although those should be in currency. All these dollar per barrel should be in currency. I'll fix that. Then you should be able to carry those numbers forward for your forecasting. If there are any numbers that you don't like on your company and you'd like to change those, feel free. I just want them to be plausible. And I just noticed that this control enter trick does not work for me on the number formatting. So what I'm going to do is come back and say equal the percentages. Let's see if we can get the dollar signs to work separately. Yeah, that'll bring across that number formatting. And then I think the rest of them are percentages. This probably needs to be currency. So we're in good shape now. The only thing left to do now is use the drivers to create the forecast. And so anything that we did here, we just need to undo it. So for example, if our oil production was growing at some certain rate, we'll take the previous year times 1 plus. This should all be very familiar. We've been doing this all semester. And then the same thing for gas. And I think the way we forecast NGL, we said NGL would be a percentage times gas. And let's see how that worked out for us. 53, 59, 71, 72. We seem to be on trend with all these, so I'm going to copy them forward. And then I need to forecast some oil, so let's do something plausible there. Let's say that we have a really bad year and then we recover to 40, and then let's get optimistic and say we're back up to 50 in 3 years. Now what I'll do on the exam, of course, is I'll have a dashboard up here, and I'll ask you to tie it to things like oil price, gas price. Let me finish my thought here. Let's say gas gets down to $1.50, 2, and then 3. And then I'll also ask you to tie that dashboard to things like these drivers. So again, just to kind of recap and wrap this long video up. Sorry for jumping around. There's the dashboard, there's the income statement, there's the balance sheet, and then everything that you've done before beneath that. The balance sheet on down is exactly like you've done all semester. The income statement is different. We just walked through it, but I'll say it one more time. I'll be very forgiving in how you get the numbers from the restatement into the model. I just want to see that you can get them into the template, that you can gather them, and then put something plausible into the template. And if all of that crashes and burns, you'll still be able to come up here to the dashboard and link things to things like oil prices and production growth and so on. And if everything goes perfectly, you'll get all the way down to your equity value per share and some ratios. And it'll be a bit of a unique final, but I have faith in you guys, and we'll be very understanding in the grading. Just want to see some good, honest effort. So good luck and enjoy.